Okay, welcome everyone. We're doing a deep dive today into quite a stack of sources that all landed around June 13th, 2025. We're looking at the crypto world, naturally.
Right. It's a really interesting snapshot from just one day. We've got this specific community argument happening in one project, but then also these huge market shifts and some pretty big corporate news, too.
Exactly. So our goal here is to sort of unpack all these different threads from the articles and reports you've got, find the key takeaways, and maybe see how they connect, help you get up to speed quickly without getting lost in the noise.
Right. And the sources are all clustered around that date, June 13th. The first thing that really leaps out is this community decision or, well, indecision.
Okay, let's jump right into that one then. It's a good look at on-chain governance, right? These sources say the Polkadot community is pretty divided on a proposal.
That's right. And on-chain governance, just quickly, it's where the actual token holders, the people invested in the project, get to vote directly on changes. Things like how the project's money, its treasury is managed. And in this Polkadot case, the big question is, should they sell off a chunk of DOT tokens? We're talking 500,000 DOT here.
500,000. Okay, and why sell? What's the plan for the money?
The idea proposed is to use that cash to build up a Bitcoin reserve for the treasury.
Ah, okay. So it's a real internal debate playing out, a major strategic decision about the treasury being decided by the community itself. The sources definitely frame it as a significant moment for Polkadot's governance.
For sure. It shows, the potential of decentralized decision-making, but also, frankly, the difficulties. How do you get consensus on big financial moves like this? It's happening live.
Right. So while Polkadot's dealing with that internal puzzle, if we kind of zoom out to the bigger market picture from these sources on the same day, June 13th, well, it looks like a very different kind of drama was unfolding, driven by outside factors.
Oh, absolutely. The sources paint a picture of, a pretty rough day. Widespread losses reported across most of the major crypto assets.
Yeah, I see some numbers here in one report. This was around 3:00 p.m. Korean Standard Time on the 13th. Bitcoin, BTC, it was down about 3.32%, trading around $104,214.
Hmm.
And Ethereum, ETH, took a bigger hit, down 9.18%, although, there's always something bucking the trend. An asset called AB was apparently up over 6%.
Yeah, always outliers. But that overall negative trend, it wasn't just prices dipping. Another source really highlights the volatility. It talks about over $1 billion in crypto liquidations in just 24 hours.
Wow, over a billion liquidated. Okay, so liquidation, maybe we should quickly explain that. It's when traders use borrowed money, leverage, right, to make bigger bets.
Exactly. You borrow to amplify your position. But if the market moves sharply against you, the exchange automatically closes your position to cover the loan and stop further losses. Your initial investment, your margin gets wiped out.
Got it. And the sources specify where most of that billion came from.
Yes, they do. A huge chunk, $943 million of it, came from long positions. So people betting the price would go up.
Ah, okay. That makes sense then. If the market was tanking, the longs would get hit hard. Definitely points to some serious instability that day based on these reports.
No question. Intense volatility.
So the obvious question arises, and one of the sources actually tries to answer it. What supposedly caused such a big drop in all those liquidations?
Yeah, one source makes a pretty direct connection. It explicitly claims that the market crash and the liquidations were triggered by military actions involving Israel and the related geopolitical tensions.
Okay, now that's a big claim, and we should be really clear here. This is the analysis presented in that specific source. It's linking global political events directly to a sharp crypto market downturn.
Precisely. We're reporting what the source claims, not endorsing it. But it highlights, according to this source, just how sensitive crypto markets can be to major world events. Things happening completely outside the crypto sphere, causing these massive ripple effects like liquidations.
It's a stark reminder, isn't it? Even with internal governance like Polkadot's, the market itself operates in this bigger, often unpredictable global context. External shocks can hit hard, at least based on the source's view.
Definitely. A powerful external pressure.
All right, so let's shift gears a bit. Moving away from the doom and gloom of the market drop, the sources also pick up on other key things happening around June 13th. Some more positive stories, Brad.
Yeah, for sure. Despite the overall dips, some specific projects were definitely making news. We already mentioned Polkadot's governance buzz, but BNB also gets highlighted for a really massive surge. The source notes it was up 275%.
Whoa, 275% in that market. That's
Yeah.
that's something. And BlockDAG was mentioned too.
Yes, BlockDAG got some attention. The sources focus on its X1 miner app, saying it's driving significant adoption, apparently reaching users in over 150 countries, all ahead of their main Go Live event. So framed as real momentum there.
Interesting. Okay, so individual projects finding success. What about signs of more traditional players getting involved? Any news on that front from the 13th?
Absolutely. There were definite signals of growing institutional and corporate interest reported. For instance, one source confirmed that a company based in Japan officially announced it had started buying Bitcoin.
Uh-huh. Oh,
Apparently, they first announced they intended to buy back in February, so this was the follow-through, the actual purchase happening.
right. Making good on the plan. And the big one, BlackRock. Anything about them?
Yeah, BlackRock, the world's biggest asset manager, reports were circulating around June 13th saying they've set out this really ambitious goal. They're reportedly aiming for $50 billion in crypto assets under management, AUM, by 2030.
50 billion by 2030. That's, well, it's a long way off, but that's a huge target. It certainly signals, a potentially massive scale of institutional involvement if those reports about their plans are accurate.
A very strong signal of long-term strategic interest, yeah.
Okay, so let's try and pull these different pieces together now.
Yeah.
Because it's quite a mix from just one day's worth of sources.
We started down at the micro level, right? Inside Polkadot, this community wrestling with a treasury decision, selling DOT for Bitcoin, shows that whole on-chain governance process.
Then we zoomed right out to the macro. The whole market taking a hit, massive liquidations, and that one source making the, let's say, striking connection to geopolitical events really shows the market's vulnerability to external stuff.
Right. But then, mixed in with that, you got these other stories, specific projects like BNB just soaring, BlockDAG apparently getting wide adoption.
Yeah, success stories amidst the turmoil.
And at the same time, these clear signals from the traditional finance world. A Japanese company actually buying Bitcoin. BlackRock reportedly setting these huge long-term crypto AUM targets.
It really just highlights how complex this whole space is, doesn't it? On any single day, like June 13th, based on these sources, you've got everything happening at once.
Yeah.
Detailed internal project politics.
Yeah. Huge market swings potentially tied to global news, specific tech rollouts gaining traction, and these massive traditional institutions making strategic moves, all intertwined.
It's driven by its own internal logic, like those community votes, but it's also clearly buffeted by external forces like geopolitics.
Yeah.
And individual projects succeed or fail against that very noisy backdrop.
Exactly.
So thinking about everything we've just unpacked from these sources, the internal debates, the external shocks causing market chaos, but also the individual project growth and the steady march of big institutions, it leads to a big question, really. How do you think this constant interplay, this tension between internal project dynamics, massive external events, and institutional strategies, how will that shape where crypto goes next, both the market overall and the individual projects within it?
That is the question, isn't it? Watching those forces interact is just endlessly fascinating.
It really is. Well, thank you for joining this deep dive today, exploring these sources with us.
My pleasure.